All right, guys, bringing you an absolute banger of a video today. In this video, I'm going to be going over my failure and reclaim strategy. I'm going to walk you guys through step by step how to use this and why this is so profitable. I'm going to show you guys two types of entries that you can get using this model. The reason this works so well is that you are literally entering after retail gets stopped out, making this one of the highest probability entry models out there. So lock in for the next 10 minutes or so, guys, and I'm going to be running through this entire strategy. Let's jump into it. All right, so here is a current long setup that I am eyeing on Bitcoin. This is a setup that I posted inside of my pro group. I'm going to break down why I'm going to be looking at a trade here and what my thesis is behind this trade. So the model that I'm going to be showing you guys is called a failure and reclaim. There's a few different terms for this. You could also call it accumulation, manipulation, distribution, but this is the model that you want to look for, okay? Your chart will look something like this. Now, a lot of people, when they're trading support and resistance, let's say you have the support zone right here. This is where most traders fail trading key levels, right? They'll set a limit order here, at this support level, and they'll end up getting stopped out, and then the trade will go their way, okay? Has it ever happened to you guys before? The reason behind this is that, quite simply, you are exit liquidity, okay? Instead of setting limit orders here at the support level, you need to have context in the trade. Now, whenever you see this sort of formation here, where you have this kind of accumulation period where price is kind of chopping sideways, maybe leaving behind some equal highs, meaning, we have one high and then we have another lower high and maybe another lower high. What price will do oftentimes is something called manipulation, where price will go below the level you're looking to long, and this will stop out all of the retail traders who put their stop loss below these lows. This is why I am a big advocate for trading swing failure patterns, failure and reclaim, liquidity sweeps, many different terms for it. By trading this way, you actually avoid this fake out move here, and you actually capitalize on the reclaim of this level. Now, this is a much higher probability setup than you just simply setting limit orders at a key support zone or a key demand zone. So again, the formation will look something like this, right? You have this accumulation period where price is chopping, then you get that false fake out move, and last but not least, you get that reclaim. Now, your entry here is going to be either on the reclaim of that level as soon as price reclaims it, or if you miss that first entry, you can look to enter on a retrace to that zone. Now, this is the strategy in simple. Obviously, you want to use more confluences. The more confluences, the better. And you will be targeting the external liquidity or the highs that are above the equal highs that you had made. This sounds very confusing, right? But it's actually quite simple. So let me show you guys the example in real time on Bitcoin here. So here is my trade thesis here on BTC. So again, the first thing I noticed is that we're kind of accumulating here, right? We're moving sideways. We don't see an impulse move either to the upside or to the downside. We're kind of just chopping around. I can see we have two major lows here. Okay, we have this first major swing low right here, and we have this major swing low right here. So before this trade even played out, I said, I'm looking for swing fails of either of these lows, meaning I want to see price actually come below these lows and then reclaim. The reason why I want to wait for price to come below these lows and reclaim is because it's stopping out retail. Where is retail putting their stop loss in this entire move? Well, if retail is long from, let's say, right around here, they're going to put their stop loss below this low, meaning we can expect price to seek their liquidity, come down to their orders, stop them out, and then continue in the direction that they had initially planned. That's why all the time you will set your stop loss, price will wick your stop loss, and then it goes in the direction that you had already planned. And you're like, what the hell is going on? I knew this was going to happen, but price just stopped me out. Are the market makers hunting my liquidity? What am I doing wrong? Guys, the market makers are not hunting your liquidity. This is just basic price action concepts. You want to wait for a sweep or a failure of a low and then a reclaim, otherwise known as a swing failure pattern, and that is going to be your entry. So taking a look at Bitcoin right here, okay, a few things I noticed. Number one, we're taking out this low, okay? As we're taking out this low, price is starting to consolidate below this low, right? We're seeing some bullish confirmations, right? Bullish buy signal on the EZ oscillator. Jump down to a slightly lower time frame. Okay, cool. We're seeing volume increase. We're seeing some bullish divergences on our oscillator. Price is most likely going to reverse back to the upside from here. So where is your entry in this move here? Well, it's very simple. Okay, there's two entries that you can use using this model. The first entry is in anticipation of a reclaim. In this case, all you're looking for is bullish momentum, right? Bullish momentum as you are approaching this low. Because if you are seeing, a sweep of a low, bullish divergences, the odds of price forming this formation and then rejecting this low once again are pretty low, okay? Because we understand that bullish volume is increasing. We are most likely going to reclaim this low. All you'd be looking for now is bullish divergences on a lower time frame and a lower time frame break of structure. So I can see on a lower time frame, we have this downtrend, right? A bunch of protected highs here, meaning price does not come back above these highs up until this point right here, where we finally get that break of structure as price is making a higher high here on a lower time frame, right at that key level that we are waiting to reclaim. So this is going to be your first entry model right here. In this case, your first TP would have already hit at a 1-to-2 risk to reward ratio. This is the best possible entry that you can get with this model. You are literally catching the bottom of this manipulation move. If you wanted to wait for an actual candle closure above this low, you can do that as well, right? Something like this. Wait for a 1 hour close above, right around here. This would be a really good entry as well. Again, bullish momentum is increasing. We have a buy dot on the Easy Oscillator. Momentum is strong. The trend bar has shifted blue on the EzAlgo indicators. This would be a really good long entry. Now, unfortunately for me, because I was sleeping, this was like midnight, I am going to wait for a re-entry. I understand that price has already manipulated to the downside, right? Price has already manipulated these previous range lows that we had spoken about, and now we are back inside of this range. So I want to look for retests of those range lows once again. So all I'm waiting for now, guys, is just a retest of the previous liquidation lows, okay? We also refer to this in the Pro Discord as a previous liquidation retest, okay? This was our major structure low that we had failed, reclaim, and now we'll be looking for another entry of this level. This is where you can combine other trading strategies. You can refer to this as an inverse head and shoulder. Now, when you are trading this method, when you have a key level that you end up failing, you displace above, right? Breaking structure to the upside on a higher time frame. Now a retest is valid. If price were to have just retested like this, still creating a lower low on a higher time frame, I would not look for a retest, okay? I need to see that structure break on a higher time frame, which we have seen right here. This move is referred to as a displacement move to the upside. Displacement to upside, okay? And all a displacement is, guys, is multiple bullish candles creating bullish fair value gaps, breaking structure to the upside. This is a strong move, okay? What this move shows us here is buyer intent, okay? Buyers stepped in at the previous range lows to push price higher. We are most likely going to see higher prices from here, guys. Okay, my target is around 110K from here. Even if we zoom out to a slightly higher time frame, what do I notice about this formation here? Well, I can see we have a ton of equal highs here on a higher time frame, right? Meaning we have these protected highs, which price is seeking, right? How does price actually move? Well, it's seeking open orders in the market. It is seeking liquidity, and equal highs, moves like this, where you have one high and then you have a second high slightly lower. This is referred to as an equal high. This is a strong draw on liquidity. Price will most likely seek these highs at some point in time, meaning we want to wait for our optimal entry to get in this move, something like this, to get to those equal highs. So let's run through this step by step. Okay, step number one, we have this accumulation period and we have our major pivot swing low that we are looking to take a trade off of. Step number two, we want to wait for price to manipulate below that low with our oscillator confluence, right? Price is obviously oversold on the oscillator. Step number three, we want to wait for a reclaim of that level. That initial reclaim is going to be our first entry. If we have missed that initial reclaim, we can wait for a retest. The only way that retests are valid is if we are seeing structure breaks and a displacement move to the upside, confirming to us that buyer intent is to push the price higher. And last but not least, we will look for a retest of that previous range low into our entry zone. Now, this is where I combine some other pieces of confluence as well, okay? I have my fixed range volume profile, which is a built-in free trading view tool, by the way, okay? From this range high to this most recent range low, and I can see that we have that value area low, or this blue line on our fixed range volume profile, overlapping that previous range low. At this point, all we are doing is simply stacking confluences to confirm to us that we can take along here. So we have that value area low confluence. We also, on our Fibonacci retracement tool, have that golden pocket fib confluence perfectly overlapping that level. Now, obviously this will change if price goes higher, right? Price goes up like this, then obviously our golden pocket fib will be drawn to this swing high. All we are doing now is creating a trade plan for ourselves. Before you enter a trade, you need to draw out a plan on your chart in advance, okay? You need to draw out on TradingView what you want to see before price plays out. This is a great way to stay unemotional in your trading and follow your rules. So I have my value area low, I have my previous liquidation retest, I have my golden pocket fib. I also have some bullish imbalances here that we can see getting filled. Even if we go to a slightly higher time frame, like a 3-hour time frame, I can see that we have this bullish fair value gap perfectly overlapping that level as well for more confluence. So this trade, guys, in real time is an A+ setup. I am looking to take a trade here on Bitcoin if we get a retest of this level, right? Something like this, and I'll be targeting higher prices. Really high probability setup here. Very mechanical, very step-by-step, not rocket science. Let me show you guys another trade using this method on Ethereum. I also posted this level inside the Pro Discord. I'll post a screenshot for proof on the screen here. Again, if you guys want to get access to my own custom trading indicators, as well as to follow my personal trades on a day-to-day basis, make sure to click the first link in the description below to join my pro group. So step number one on Ethereum, I saw we had this accumulation range, and I saw we had a ton of equal lows here, right? A low right here, a low right here, a low right here, a low right here. So I was expecting price to come down to take out these lows before moving back up to the upside. So this was my major range low, right? We have the range high up here, the range low right here. I was waiting for a liquidity sweep and reclaim of this range low, which we had gotten. You can see that price came below this level briefly and then continued to the upside. So again, you want to go down to a lower time frame and look for your confluences. What do you notice on our momentum oscillator as price is coming down to this level, right? Well, we're seeing this kind of gradual pullback as the momentum oscillator is creating bullish divergences, meaning momentum is increasing as price is decreasing. This is referred to as a bullish divergence. This is what I look for on a lower time frame to find an entry. Now, although this wasn't a very clear manipulation, right? We're not chopping below and then reclaim. We still technically swept this low here with those bullish divergences, making this entry right here a valid entry with your stop loss at that wick low, making the trade break even at this high right here. The reason I'm not interested in taking partials at this high is because my risk to reward is not big enough. Okay, we're only at a 1-to-1 risk to reward. Ideally, I want to be targeting higher prices. Okay, again, we have an equal high up here, which is a strong draw on liquidity. So this is going to be my target for around a 1-to-3 risk to reward ratio. No partials for this Ethereum trade. Again, we're taking out lows. We're reclaiming those lows with bullish divergences. You see, we even got this AI reversal buy signal here on the algo. So our confluences are met. Now we can target the range high. That is how you can trade failures of a range. This is the best way to trade support and resistance. Wait for a failure of a key level. Wait for that reclaim. Look on your divergence oscillator for those bullish divergences, and that is going to be your entry trigger. If you guys want more hands-on coaching, you guys want to follow up my exact trades on a day-to-day basis, as well as to follow our other full-time crypto analysts inside the Discord. Again, that's going to be the first link in the description below. Leave a like on the video if you guys enjoyed. Comment down in the comment section below if you guys have found value. Make sure to subscribe to the channel for more trading content, and I'll see you guys next video.